Let's talk about break-even analysis. If I'm in a business and I manufacture something, I want to know before I start, how many of these am I going to have to sell in order to break even? Because if I don't think I can sell that many, then I'm not even going to start. All right? Now, there's a lot of terminology. We have fixed costs, and here's an example. It says, assume that this company produces pens that have a selling price of $2, a variable cost of 80 cents, variable cost of 80 cents. Now, what we say is that variable cost means it depends on how many you make, all right? So that means each pen costs us 80 cents to make. The materials for it, the labor, all that, that's 80 cents. So if we subtract, we say, I'm going to make $1.20 on each of those pens, all right? And they call that the contribution margin. So I'm going to make $1.20 on each of those pens. Now, here's the problem. I also have fixed costs in my business. I've got to rent that building, I've got to pay my employees, I've got to pay utilities, and that, I'm going to have to pay that whether I make any pens or not, okay? So our fixed cost in this situation, let's say there's $60,000 of fixed cost. It doesn't tell us over how much time, and I'm guessing that might be for a year or for a month. Depends on how big the facility is, okay? So if our fixed cost, let's say it's for a year, it's costing us $60,000 just to open the building for a year, all right, even if we don't make one pen. So now the question is, how many of these pens do we have to manufacture to cover our fixed costs before we even start making money? That's called the break-even point. Okay? So let's look. What we would do is we'd say, I'm making $1.20 on each of these pens. So if I divide this by $1.20, that's going to tell me how many pens I have to make before I even pay off my fixed cost. So 60,000 divided by $1.20, I believe that's 50,000, is that right?
Yeah.
And we would call that, that's 50,000 pens, we would call that the break-even point. In other words, let's say we're talking about a year for fixed cost. We'd say the first 50,000 pens we manufacture and sell, that just makes us break even paying our fixed cost. So we're going to have to sell more than that before we even start making a profit. So that's how you figure a break-even point. You say, here's what I can sell them for. Here's what it costs me to make them. I can profit. They call that a contribution margin. In other words, each pen contributes this much margin to the bottom line. But I'm really saying, I make this much profit on each pen. So how many of those pens do I have to sell to pay off my fixed cost? That's my break-even